Your 2020 taxes are in the rearview mirror or will be soon. Now it's time to plan for 2021 and save yourself money and headaches. I'm Tracy Capelman. Join me right now for your Wealth Health. Hello and welcome to your Wealth Health, a show focused on helping you manage your money. I'm your host, Tracy Capelman, and I am here once again with the founder and CEO of Hilltop Wealth Solutions, Ericbrenner. Eric is a certified financial advisor with nearly 30 years of experience. Combined, Eric and his advisory team have more than 115 years of experience in guiding clients along their financial journey. Eric is joining us now. He and his team just got done with some continuing education a little over a month ago. Eric, I know you guys do a lot of that. It's really important to you, isn't it?
Yeah, it really is, Tracy. And first, that 28 years and 115 years combined experience makes me feel a little bit old. But we do a lot of continuing education, Tracy. You know, things change in our industry. Tax law changes. You know, investment strategies change. You know, there's a lot of change that happens, and every year we do some real intensive training with our Ed Slott Elite Advisor program. We do that twice a year as an advisor team. And actually, as a firm, we spend more than $50,000 every year in in continuing education.
And people want to know that they're working with somebody that knows the latest as things change so much, don't they?
Yeah, they really do. You know, we just want to make sure we're really bringing the best advice to clients. And it's not a status quo thing. You know, things have changed over the years drastically in certain areas. And so we just want to make sure we just continue to stay updated.
Now, let's jump into our topic today, climbing your financial mountain. Now, I'm climbing my financial mountain. Gosh, speaking about change, I have to tell you, it just feels more complicated than it used to be with everything going on in the world. So I saw a couple of quotes in the media recently that I wanted to ask you about. Now, these were on some notable media sources. The first was from the Motley Fool Investor, and they said, if you're not careful, you can ruin a lifetime of successful saving when it comes time to withdraw money from your nest egg. And then recently from CNBC, they said, on the surface, retirement planning hasn't changed all that much over the years. You work, you save, and then you retire. But while the mechanics might be the same, today's savers are facing some challenges that previous generations didn't have to worry about. And then our last quote is from Ed Slott, renowned author. I just started reading one of his books. He's an IRA expert and TV show host. And I think that this is a great way to think about this. He says, retirement planning is like a football game. There are two halves, and the score at the end of the game is what counts. The first half is the accumulation of wealth, and most advisors are good at that. The second half is about protecting money and preserving it. And the IRS often wins because they're playing the second half against nobody. So the average advisor thinks only about returns. They're not thinking at all about tax strategy, it sounds like. 99% of people lose money because they don't think about tax strategy, and 99% of advisors are not trained on this issue. Well, Ed Slott, CPA and founder of Ed Slott and Company, as you heard his quote there. And Eric, you guys have a relationship with him. And you at your firm, you guys are all about strategy. So first, let's talk about what those challenges are that you see people facing today, not only as they plan for retirement, that is, but also what challenges they're facing during their retirement.
Yeah, it really has drastically changed. And you know, I've have a graphic here, Tracy, that really lays out, 30 years ago, you had 65% of retirees' income was Social Security, 43% of retirees had pension plans. Healthcare costs were mainly covered by employers, and the average life expectancy was 75. And we had a lot less investing solutions or investor solutions and choices then. Today, 27% of a retiree's income is Social Security. 19% have pensions. So if you have a pension, you can feel fortunate about that. But most people do not have pensions. Most retirees are paying for their own health insurance, and the average life expectancy is 79. And then our solutions, Tracy, have just gotten a lot more complicated over the last several years.
You know, that makes a lot of sense. There are so many factors that have changed the way people need to look at their financial futures. You know, we are more responsible now, as you said, for our own futures. And I know you use this great just analogy of saving and investing for the future. You say it's like climbing a mountain. So how does climbing a mountain relate to one's financial life?
Yeah, so it is a great analogy. In fact, what I'd like to start off with is taking a look at life expectancy. This is one of the things that has changed. And those quotes that you had mentioned brought up, you know, you can't plan like your parents plan. So if you take a look at this graphic, this really shows that if we have a couple age 65 today, you know, there is a 83 or 53% chance that the male will reach it to age 85 and a 64% chance of female. And then there's an 83% chance that one of them will survive to age 85. If you look at age 90, 62% chance that there's going to be one of them surviving at age 90. And so, Tracy, that really sums up, you know, life expectancy, and it's only going to get, you know, longer as it relates to life expectancy. So we use this mountain analogy, you know, and this is a great analogy. And I think about, you know, someone climbing their financial mountain, you know, that's the accumulation phase. It's working, savings. They have to choose between 401ks. What investments do you have in the 401k? Are we invested properly? They're thinking about putting kids through college. They're really working at trying to get to that top financially, so then they can start to come down. And when they're coming down the mountain, they have to make decisions before they even start the journey of Social Security. Are they in the right investments? What's their tax situation look like? Should they take money from their IRAs? They've got longevity and health risk. You know, do they have longevity in their family? And they have to think about inflation. Well, interesting enough, Tracy, is that in mountain climbing, 80% of the fatalities that happen are on the descent, not on the incline. And so we actually see very similar analogy. Obviously, they're not tragedies, but a lot of the mistakes happen on the way down, not on the way up. And so we just think people really need to plan for that.
Absolutely. Plan for it, get advice about it. I know I have family members who are beginning their mountain descent or their retirement years. And you've spoken in the past about a window of opportunity. Can you explain for our viewers what that is?
Yeah, so the window of opportunity is between age 59 and a half and 72. And the reason why is maybe someone doesn't retire at 59 and a half, but that's when you can start drawing money out of your IRA and not be penalized. So 59 and a half. Age 72 is when you must withdraw from your IRA. So people have this window of opportunity if they retire at 65 or 66. They have this window of opportunity before they must withdraw. They're forced to withdraw money. And I think what's a big shocker is that how much money they may have to withdraw. You know, as a nation right now, in retirement plans, we have more than $4 trillion, and that is money that's yet to be taxed. So this window of opportunity is really where you can set in and lay out a good plan to make sure that you're not paying too much in income taxes.
Good advice there, Eric. So I'm a big do-it-yourselfer, and I think a lot of us are. We like to do our own home projects. Maybe it's our own landscaping, painting, remodeling, whatever, you know, with the help of Pinterest and YouTube. We like to fix our own cars, and, you know, that's getting harder to do with the electronic components today. But when it comes to finances, you believe do-it-yourselfers might be missing out, don't you?
Yeah, we really do. And it is easier to do it yourself today with the internet and being able to, you know, invest directly with one of the large brokerage firms, and you hear, you know, no trade cost and so forth. But really, here are the problems that we see, Tracy. You know, climbing your mountain, right? We talked about that, saving, investing, you know, paying down debt, getting kids through college, you know, that descent. We talk about the tragedies that can occur on the way down. You only get to retire one time. So, you know, really big one time. And so what you want to make sure of that, mistakes can really cost you tens of thousands of dollars, if not hundreds of thousands of dollars. And retirees don't have a written income plan. So they really don't have a plan as to how are they going to take income from where they saved and what they saved. The do-it-yourselfers also, they don't consider all aspects of retirement. They don't consider Social Security, taxes, investments, inflation, all of those aspects. And then finally, a lot of financial advisors really only consider investments. They don't take into account the whole picture. So all of that put together, I think that's something that people really need to consider to make sure that they're getting professional advice.
There really is a lot to think about if you're going to try to manage money yourself. And there certainly could be value in getting a second opinion just to make sure that you're on the right track, right?
Yeah, absolutely. I mean, a second opinion is, and what I say often is it's hard to get a second opinion from the advisor who gave you the first one. So just making sure that you are on the right direction. Oftentimes we will meet with people and talk with people and they are in the right direction and they've gotten good guidance. But this is something in this area that it's really hard to do, even as a do-it-yourselfer, to do a really good job because of our complexities in our system and our tax laws and how you coordinate it all. I often tell clients that, look, I have retired many times, dozens and dozens of times, not myself personally, but I've helped people through that journey to make sure that they're making good financial decisions for themselves.
I couldn't agree more. I think it's very complex and a professional. Wow, so critical. Well, I know your staff at Hilltop Wealth Solutions does provide a no obligation second opinion. Let our viewers know more about what that includes.
Yeah, so what we talk about and offer up here is a retirement roadmap. It's a free roadmap review. So it's going to include a portfolio risk assessment, really determining where you are risk-wise. How much are you really paying in cost for that investment? A Social Security analysis. So it's going to look at different options of Social Security. Oftentimes, Tracy, we run 4,000 to 5,000 different scenarios in Social Security. And you'll see there on the screen that 100,000, we often save people over a course of their time, $100,000 plus in wrong decisions in Social Security. And then a forward-looking tax plan, really taking a look at what taxes are going to look like and making sure that they're making the best decisions. And we often see that we can sometimes save people over their retirement lifetime upwards of $250,000 in taxes.
Wow.
Just based on that, because if they're making mistakes that are $3,000, $4,000, $5,000 a year over a period of time, that really adds up.
It sure does. And so how can somebody contact you guys? Tell me how people can get with you for that free assessment.
Yeah. So all they have to do is they just call the number, or what they can do is they can go to our website at hilltopwealthsolutions.com. We have they can schedule right there for a 30-minute free introductory conversation. What that'll do is that'll allow us really to find out more about them. They can find out more about us, and we can determine whether or not it makes sense really to then move on and gather more information from them. And what we will come back with then is this strength and areas of improvement assessment. And that's this roadmap, what's good, what's a good direction, and what are some areas for improvement. And then from there, then they can determine whether or not it makes sense for us to go forward. What we want to tell people too is we're not high pressure. We don't sell products. We are independent and we're fiduciaries, which means we must always act in the best interest of the client. So we really want to make sure that, we are helping folks along the way and they're making good financial decisions.
A lot of great information today. Thank you so much, Eric. Well, looking ahead, a topic that's going to pique your interest. Now, don't we all want to know, hot stock picks? I know I do. The question is, what stock can I buy to make a lot of money? Next week on Your Wealth Health, we're going to dive into investing and what you should think about with your investment strategy. We'll talk about how Hilltop takes a different approach They'll describe their fact-based, unemotional approach using thousands of data points. It's how they put together a quality investment approach to achieve their client goals. So be here for that. And until then, I'm Tracy Capelman for Ericbrenner and the entire Hilltop team. Thanks for watching and stay wealthy, everyone. We hope you found this discussion helpful today. Don't forget to like and subscribe to our channel for new content weekly.